Welcome to the Mortgage Interest Rate Weekly Market Update for the week of October 3rd, 2016. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was definitely good for mortgage rates. Mortgage rates are again at all-time record lows. But if you take a look at the bond chart on the screen, the bond is up against this extremely tough ceiling of resistance. You can see right there, we closed right at the ceiling, and then at the end of the week we closed below it. That's a tough ceiling to break through. The bond looks like it has a long way to run down, not much room to run up. We haven't broke through that resistance in a long time. When we did, we closed right back below it. So with that in mind, with interest rates at all-time record lows, the bond up against a huge ceiling of resistance, we're going to recommend locking in your interest rate to start the week. Take advantage of these great low rates because in the near term, it looks like they'll move higher before they move lower. Now, in economic news, a lot of news this week. We had the gross domestic product, the final reading of the second quarter of 2016 came in at 1.4%, which was better than the previous reading of 1.1%, but still well below a healthy economy. You need about 2.5 to 3% GDP to have a healthy economy. This also marks the third consecutive quarter that the GDP has been below 1.5%. So that's showing a slowing in the economy. There's some other factors going on that could be pointing to a recession very soon. So look out for that. We had consumer confidence for September 2016 come in, and that soared higher to 104.1 from 101.8 in August. So this reading for consumer confidence is the highest reading since the recession of 2008. So that was a great read on consumer confidence. That's how consumers are feeling about the economy. Then we had the weekly initial jobless claims on Thursday, showed 254,000 claims for the week. Now it's up 3,000 from the previous week. That's still a very good number. Basically, it's measuring how many people filed for unemployment benefits that week. Now, last week's number was actually rose lower to 251, and that's going to be the week used for the jobs report this Friday. So we're looking for a very good jobs report coming out this Friday. Now, in housing, a couple reports there. New home sales for August 2016 fell 7.6% from July, the 609,000 units on an annualized basis. Now, even though it was a drop, it was still a good report, because if you look at the chart there, July was just a huge spike up in new home sales. We're still doing good. We're above June, May, and April's numbers. So new home construction, if you look at it on a year-over-year basis, we're up 20.6% from August of 2015. So new construction still doing very well. Now, pending home sales for August fell 2.4% from July on the index. The slowdown in pending home sales attributed to a low inventory across the country, but low inventory does support higher home prices. So still a good report, just a slight drop because of the low inventory we've got going on. And then we got some housing news. USDA rural housing has changed two things. Their upfront guarantee fee dropped from 1%, dropped from 2.75% to 1%. That was effective October 1st. And then they also lowered the factor for the monthly mortgage insurance from 0.5% down to 0.35%. So that's effective now. That makes USDA home loans even more affordable for home buyers. And then the FHA Back to Work program expired Friday, September 30th. That was the program to reduce wait times for bankruptcies, foreclosure, and short sale to 1 year. So moving forward, there is no exceptions for that Back to Work program. You're on the current wait, which is foreclosure or deed in lieu, is 3 years from the date of the event. The title was changed out of your hand. Short sale is 3 years from the date of the short sale if you were behind on the short sale. Chapter 7 bankruptcy is a 2-year wait from the discharge date, and a Chapter 13 bankruptcy is 1 year on-time payment in the bankruptcy. You're eligible for that. And then in the local news, the next first-time homebuyer seminar is Saturday, October 15th in Dover, Delaware from 10 a.m. to noon at the Dover Holiday Inn. And the next one in Newark is Saturday, October 29th from 10 a.m. to noon at the Christiana Hilton Hotel in Newark, Delaware. You can register for either one of those events. Give us a call in the office, 302-703-0727, or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.